Thank you to Metals Investment Forum for the opportunity to present here today. So it is Arizona's Sonoran copper company, and obviously we're developing the next mine in the US for the green energy transition. We do make some forward-looking statements, so I'll draw your attention to the cautionary language. A little bit on the share capital structure for the company. Today we have 109 million shares issued. The options and warrants are not in the money. Those are priced between $1.80 and $2.45 Canadian, which was the IPO price approximately 2.5 years ago. The company is debt-free, and today, cash in the bank, we have just over $21 million US. I'm sure you're all very well aware that late last year we announced a non-equity, non-dilutive financing with Rio Tinto and their Newton division. And I'll talk a little bit more about that within the scope of the presentation. But we've already received $15 million US from them. So the company now is well funded throughout the next 12 months for its own work programs and those of Newton. Tembo Capital continues to be a very supportive shareholder. They did participate in a financing last year, although they did allow themselves to be diluted down to 31%. There's 10 analysts covering the company with a 12-month target price of $3.40 Canadian. Today, I believe we closed at $1.47, so that's a potential plus 100% uplift very shortly. So for those of you who don't know, this is a former producing mine in Arizona. It's a big copper porphyry system. It's a brownfield site. It benefits from significant infrastructure, given that Interstate 10 is only 10 miles to the northeast. The Maricopa-Casa Grande highway is on our southern border. We have an electrical transmission line coming into the property. We have historical water rights to the year 2070. It's all on private land, so there's no federal nexus. So when it comes to permitting, we only deal with the state and the local municipality. Since acquiring the asset 3.5 years ago, we've grown the resource from 224 million pounds of copper in a historical surface stockpile to today we have 7.4 billion pounds of copper in the ground. And we believe that we're going to continue to see exploration success there. Obviously, if the Newton technology proves itself further over the next 12 to 18 months, we have the ability to unlock another 2 billion pounds of copper contained in the primary sulfides, which is not part of the company's current business plan. Obviously, we're delighted as well that we've partnered with Rio Tinto, and obviously that's going to help us going forward as far as project financing and execution risk. So this is the global resource that we put out last year, October. The key number to look at here on this slide, I'd say, is the measured and indicated leachable copper. As you all know, we have a pre-feasibility study that'll come to market in the first quarter of this year. And we anticipate that that'll be out sometime in the next 2 to 3 weeks in early February. So there's 4.4 billion pounds of leachable material in M&I. We've guided the market that we believe the PFS will target a 25-year mine life with average annual production of around 50,000 tons of cathode production a year, or 100 million pounds. So if you multiply those two numbers together, you'll get 2.5 billion pounds of copper produced. And right now, the PFS is showing about 4.4 billion pounds converting over to about 3 billion pounds of maiden reserves in the probable category. So because it's all private land, there's no federal nexus. When we deal with the local state and municipality, when we apply for a permit, once the application is administratively accepted, within 6 months, the regulator must give us a response to the permit. The longest we've had to wait for any permit to date is 5 months, when we applied a couple of years ago for an amendment to the Aquifer Protection Permit. The Cactus project today is fully permitted. So when I refer to Cactus, what I'm talking about is the surface stockpile, the Cactus West open pit, and the Cactus East underground deposit immediately adjacent to that former open pit. What is not permitted currently is Park Salyer, which accounts for £3 billion of resource within the global resource that I previously showed you. So with the PFS now substantially completed, we're making the applications out for an amendment to several of our key permits, and we would expect to have those permits in hand by the end of the third quarter this year. And then on the back of that, we obviously will move into a bankable feasibility study once this PFS comes out. We anticipate that that'll be out late this year, early next year. And with project financing arranged, we can start the construction and development. Right now, we are still showing a 18 to 24 month construction and development period. So if we can start breaking ground early in 2025, there's every possibility that we can see first cathode production here before the end of 2026. So we announced this Newton transaction late last year, and in the short term, it gives us access to $33 million in funding. $10 million of that was purely for the signing of the agreement. $12 million is allocated to the work programs over the next 12 months. And included in that number, there's almost $3 million in a management fee, which is given to the company. And then there's $11 million, which is allocated in two tranches of 5 and 6, which we can make land payments to. That's quite important because at the end of February, we'll be making a $5 million payment to the private landowner at Mainspring, whereupon we will take legal title of that 500 acres. So in a nutshell, what we agreed with Newton was that once we produce our base case PFS, we commit to an integrated Newton PFS. Provided that Newton PFS provides 1.39 times uplift on the NPV, they will have the right to earn into the project. So if we take, let's say, our base case project after tax is $500 million, they could earn in up to 40% of that. They would therefore have to pay the Arizona Sonoran shareholders $200 million at a 0.65 times multiple, which if you work that out is $130 million. If you then think about receiving $130 million from Newton, and we think about project financing, let's just assume that we need $500 million to build this project. Now, they would be funding 40% of that, which is $200 million, and we would be funding 60%, which is $300 million. 50% debt, 50% equity. So if I'm looking for $150 million in equity, but I just got $130 million of payment from Rio Tinto, the delta is $20 million. And if you convert that into Canadian, we'd be looking at, let's say, $30 million Canadian at $2 Canadian share price. I'm only issuing another 20 million shares. So when you look at this on a NAV per share basis, this is hugely accretive for the shareholders of the company on top of what's already going to be a very robust return from these type of levels. So currently right now under the investor rights agreement, Newton has a 7.2% stake in the company at Topco. They're not allowed to go above 9.9% and there's no board seat. All of this investment is at the asset level. What will also happen is when you see the PFS come out and you see the average annual production in excess of 50,000 tons a year, when we layer in Newton technology on top of that and we get access to the other 2 billion pounds of copper and primary sulfide, the production profile is going to go above 100,000 tons of annual production. So if we're giving away 40% of that to Rio Tinto as part of the earn-in, we are still retaining 50 to 60,000 tons for ourselves, which is at or better than the base case that you're going to see in 3 weeks' time. And there's no dilution coming for the shareholders of the company. So brownfield site, great infrastructure, low cost of capital coming out in the PFS, very simplified permitting, no federal nexus, significant permits in hand, amended permits coming by the end of the year. Because it's a heap leach operation and we benefit from all the existing infrastructure, remember the city of Casa Grande with 55,000 people is 5 kilometers east of the project. There's no camp going in. There's no roads. The transmission line is there. We have access to water. This will be an $8,000 to $10,000 a ton capital intensity project, which puts us in the top quartile of all copper projects today in the world. The resource is going to continue to grow, and with Mainspring in the gap zone between Park Salyer and Cactus West, you can expect the resource here to grow in the next couple of years above 10 billion pounds of contained copper in the ground. You've also got a management team with a proven track record of delivering exceptional results for the shareholders, and hopefully you'll see that with the Newton transaction being non-dilutive, dilutive at a time when junior companies are finding it difficult to finance, that was a tremendous outcome for the shareholders of the company. So that concludes the formal part of the presentation. Thank you.